Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of LME 3-month copper, aluminium and lead. LME 3-month copper. Now the V-top over the middle of May drove this market lower until mid-August, down through three important congestion zones which have now become important once again. Congestion at 97.50 to 99.95, then between 93.95 to 96.06, most recently a smaller one between 91.83 to 92.56. Prices also pushed down through the combination of 50% Fibonacci line of the July 2022 to May 23 move, and the gold highlighted long moving average, currently 90.82. In the process of turning lower, the market had exited one pattern straight into another, and then another. Originally from a bullish Andrews pitchfork, then into a narrow descending wedge pattern, and in the middle of June and out of this and into a mid-June to early July, dark blue highlighted bearish shift pitchfork. Late last week, prices started exiting out on the top side out of this very bearish, this bearish shift pitchfork, the one I've been speaking about. And we have seemingly stabilized above and outside this pitchfork and also over the gold long moving average and edging over the 91.83 to 92.56 congestion band. The base of the move higher was on the purple highlighted fairly flat extension to the upper trend line, currently 87.77, of the June to August 2023 ascending triangle, which is still there on my daily chart. It's down towards the bottom end of the chart, and that was back in early August. Now I highlighted this trendline extension a number of times as, and I quote, "On its own it's not that important, but it is the gateway to a whole load of congestion below, dating from late last year and all the way down to the 81.15 level. So it is worth noting," end of quote. This would explain why the market halted there and has turned back up. For a few weeks I even contemplated the action since February as being a V-top with an extension. However, that does not look likely now, so it's time to start looking at the overhead congestions between 93.95 to 96.06 and then between 97.50 to 99.95 again. Please note the 93.95 to 96.06 congestion has the declining short medium moving average, at this time falling down within it, and that's currently at 94.57. And between this congestion and the next at 97.50 to 99.95, we have the roughly flatlining medium moving average, currently 96.74. LME 3-month aluminium. The move higher over March, April, May, and I suppose even the most recent one from late August to date. From late July to date, originates back in late February, with the market breaking higher from a diamond pattern type formed between late October 2023 and late February 2024. Please remember this pattern, as it is the congestion generated by this diamond pattern on the wide, which is between 2100 to 2400, but really between 2156 to 2297, that is causing the very recent rise, obviously not the pattern itself. Okay, so going now to the peak in late May, the market back then made new recent highs, but at the same time sowed the seeds of its own bullish destruction by making a 2-day pipe top that was also part of a larger 2-week horn top. Prices in essence moved lower with a small halfway hesitation in early June, a larger one over mid-June to mid-July, until the end of July when the decline was stopped by the extension to the neckline, currently 22.27, of the June to July 2023 reverse head and shoulders neckline pattern. From this base, prices started to build a base and experiment with moving higher. Thus, we have been back now in the same price zone as the earlier diamond bottom pattern, roughly between 2400 to 2100. Over early to middle August, the market constructed a small ascending triangle pattern, reaching the primary top side target last week and the secondary target yesterday. In the process, the market pushed up through some significant resistances, notably the gold long moving average, currently at 23.65, and the twin neckline extensions, the October 2022 to May 23 head and shoulders top, currently at 23.24, and the March to May 2023 head and shoulders top, currently 23.38. All this was done within the last week. As for this week, well, we have seen prices utilize the gold long moving average as a base for a further attempts higher, up through the May 2023 high at 23.87, then into a free area until a congestion band between 24.41 to 24.62, containing a 50% Fibonacci line of December 2023 to May 24 move at 24.54, and the April 2023 high at 24.62. Today we've peaked for the moment, just over the congestion at 24.85 and just under the slowly rising medium moving average. We've managed to get up to 25.08 actually. Is it 25? Yeah, 25.08. And we are at the moment just under that slowly rising medium moving average, currently at 24.95. These congestion levels are the start of a band of resistance fairly widespread that encompasses the bearish halfway hesitation from late June to mid-July, roughly between 24.85 to 25.36. In this band is the middle time, currently at 25.29, highlighted in bright red of a newly drawn bullish pitchfork, one of the two that I've drawn for the mid-December 2023 to late July 2024 action. The bright red one is the shallower bullish shift pitchfork, and the more acute purple one is the bullish Andrews pitchfork. I'm hoping that one of these, if not both, may provide the start of the recent bullish angle of attack. We have further congestion overhead at the December 2021 low at 25.81 and at 26.08 before we then reach that purple middle time, currently at 26.11. LME 3-month lead. I said 22 weeks ago here, and I quote, "I suspect the key overhead resistance will be the same as in late January, the congestion between 21.82 to 21.89. End of quote. Now please remember this quote, or rather remember that 21.82 to 21.89 level as we become relevant again. So the big elephant in the room, as I called it now for 15 weeks, was the mid-February to late March bullish Andrews pitchfork. In late May the market breached the upper time, but it repaired itself. Or so it seemed, but the breach allowed a bearish inflection to set in that ended up with it being a horn top over late May, which was the high point of the recent move upwards. And moving into June now, and we saw prices fall, reaching the primary and secondary targets for the horn top, with the market continuing to drive lower, down through a wide band of congestion originating from April between roughly 21.35 to 21.86. In the process, the market formed an acute, narrow, bear channel. 9 weeks ago, we saw prices break lower, though by first moving up to the resistance band between 22.13 to 22.25 and even breaching it. However, the metal didn't like it up there and turned back down again, finally through the whole combination between 21.86 to 21.35, which is why I highlighted at the very beginning of my commentary that 21.82 to 21.89 congestion. 5 weeks ago, prices punched down through and closed below the long moving average, currently 21.36. These were a fairly free zone below, bar the congestion seen at the beginning of this year. All the way down to the combination of the congestion at 20.58 and 20.38 level, the dark blue highlighted middle time, currently at 19.24, of the late May to mid-July bearish Andrews pitchfork. The fall continued down through supports at 20.58, 2039, 2021 and 2002 that formed the next congestion. 2 weeks ago, the prices reached down to just short of the 2021 low at 1908 before turning back higher, somewhat violently. Only the dark blue upper time, currently at 2045, managed to cap the rise last week, or just about on the Monday, but not so this week. Prices yesterday punched up through the dark blue upper time, though without closing over it. Today we have punched up again, and this time it looks like we may have a close over it, but it's borderline at the moment. If prices do stabilize over this breached dark blue upper time, then the next level topside to look at is the lesser Fibonacci level at 21.12. And then the combined long moving average currently at 2136 and a 50% Fibonacci level at 2135. Hence it'll be an interesting latter part of this week to watch out for. Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Service International Limited. And here comes the final important bit.